We are back in open session, and as a result of the closed session, I'll seek a motion to approve the chief auditor contract with terms and conditions as discussed.
So moved.
Okay, is there a second?
Second.
Okay, any discussion? Seeing none, all those in favor signify by saying aye.
Aye.
Any opposed? And the motion carries. Congratulations, Kristen. And we will move on to number 7, which is the KPPA Audit Committee recommendations. And Kristen is up.
So the first that we met, the audit committee met on May 29th for a regularly scheduled meeting. There are several items that are being presented for ratification to the board. The first item that was discussed was the budget. Sherry, I believe you have that. So this is the budget for fiscal year 2026. We looked at expenses and cost of things, and since we raised the budget, we estimated a 9% increase. So that's what's reflected here. A lot of that increase is the fact that our division is finally fully staffed for one of the first times, so there was an increase in salary. But that was the budget that was approved by the audit committee, and we are seeking ratification of that budget.
Move approval.
Second.
Okay, any discussion? Seeing none, all those in favor?
Aye.
Aye. Any opposed? And that motion carries.
The next item that we are seeking ratification is the annual risk assessment and audit plan. And Sherry, that's on page 12 of the board books materials. So every year, internal audit conducts a risk assessment. We talk to various people, and we put together a plan. And that the entire risk assessment is presented in board books. And what you're looking at here is the plan that we created based on those risks. So this is a risk-based audit plan, but we made a slight change this year. So if you just go with the highest rated risks, you're going to see 1 or 2 areas that would have all the audits, just solely because of the nature of the business that they do. So in order to get an overview of the entire agency, the way we laid out the audit plan this year was to select the highest rated or one of the highest rated risks from each area of the agency. So that way we're looking at the entire agency, and one area isn't getting several audits throughout the year. Looking at the time and resources, there was going to be one area that we would not be able to look at. So if we look at every area each year, somebody will not be audited. And given everything that is going on in their division, and as much as we've looked at them recently, for 2026, accounting is the area that received the break. So they are not, you won't see an audit for Division of Accounting. It doesn't mean we won't talk to them because they touch a lot of areas, but they don't have an audit directly with them this year. And then the 2027 plan is also presented, and in that year, the Division of Communications is the group that is not included. So there was discussion about the audit plan, and this is the version. If you were on the audit committee, this may look slightly different because there were 2 alternative audits presented, and the audit committee picked the ones that they wanted. So this plan includes the alternatives that were selected. So this is the final audit plan that was approved by the audit committee. And we are seeking ratification of this plan for 2026 and 2027.
Bill?
Yes, thank you. I just wanted to compliment the process and the preparation of this risk plan. One thing that was added is trying to guess or estimate the time involved, not just by the audit team, but also of the area that is being audited. So there's a better way of knowing the larger or smaller scope of each audit. There was good discussion with management, and I just wanted to compliment the product, and so moved to approve by the board.
Second.
We have a motion and a second. Any discussion? Seeing none, all those in favor?
Aye.
Aye.
Any opposed? And the motion carries. And back to Kristen.
The final item that needs ratification is we went over the audit reports that had been presented since the last audit committee meeting. There were four reports that we reviewed. They start on page 38 of the audit committee materials. I can go over these in detail if you want, but I was just going to give a high-level summary, and then I can take questions if you have any. The first one that you're looking at was a follow-up on open audit recommendations. So on December 31st of each year, well, in January of each year, we run a report showing every audit recommendation that had an implementation date of December 31st of the prior year or earlier. And then we follow up to check the status of those items. There were 23 items with a implementation date of December 31st, 2024 or earlier. During our follow-up, we found that 17 of those were closed, that action had been taken, and 6 of them, management requested an extension to either September or December of this year. So that's what we went over with that. Any questions on those?
We lose Kristen? Or
You
did I-
freeze in the room.
Looks like it.
That's unique.
Yeah.
Well, deja vu for me.
Philip? They can't hear us.
What's that?
They can't hear us. Oh. We lost everything.
Yeah.
That was so odd.
List of
We had a brief interruption there due to an IT issue, but Kristen, go right ahead.
Okay, so I think Sherry tells me we were at the part where I was saying there were 17 recommendations that when we did this follow-up that action had been taken and audit has considers those items closed, and there were 6 that management asked for an extension to either September or December of this year. And does anybody have any questions on those items?
Like no questions, so I will, we ready for the motion, Kristen?
You can do each one individually, or we can do them all at the end, whichever you prefer.
Okay, well, let's do one motion, so if you want to go right ahead.
All right, so Sherry, the next one is on page 45, starts on page 45. So with this, we looked at the disability hearing process. There were no findings or observations for this process. We did have a few opportunities for improvement, which were related to updating procedures to reflect current practices. The biggest thing that came out of this is we created a timeline to show how long the process is taking. And we did note that management is already working on a process to alleviate some of the backlog with the disability hearings, and they have noticed recently a decrease in discontinuances, so they expect that backlog to continue to decrease. Any questions on that audit? If If not, the next one is page 60. And this was looking at the hiring process. So much like the disability, there were no findings or observations. We had a couple of opportunities to improve related to updating the procedures to reflect current practices. And with this, we also included a timeline to show how long it takes to hire. Once a division here says we need to hire someone, how long does it take to actually get that person in a seat and working? And we found that the average is 47 days. And for comparison, personnel tells most people you're going to have an average of about 90 days. So we are far below that. So this process is working well. So congratulations to HR. They know they know how to handle this process and get us through it quickly. Any questions on that audit? All right.
Looks like that's the end, correct?
There's one more.
One more. Okay, sorry.
Yes, page 78. Yes. So this travel. With this, we had one recurring issue. So the last time we looked at travel, we had a finding, and that we had that same finding in this audit, and that deals with if an employee travels and they receive reimbursement for their meals, but they do not stay overnight. That meal is supposed to be treated, per the IRS, that's treated as a taxable fringe benefit. And we found a couple of instances where that did not happen. It's already been corrected. Outside of that, again, the only thing we had were some opportunities to improve regarding updating procedures to reflect current practices. Any questions on that audit? If not, that is the last one.
Okay, and so I will seek a motion to ratify the audit committee's approval of the internal audit reports, open audit findings as presented, and to authorize KPPA staff to implement any corrective action.
So moved.
Second.
Any discussion? Seeing none, all those in favor?
Aye.
Aye.
Any opposed? Motion carries. Thank you very much, Kristen.
Thank you.
And we're ready for item number 8, which is the administrative budget, hybrid percentage, investment budget, and board separation expenses for FY26. And Michael Lamb is with us for that.
Thank you. The agenda item has separation costs and hybrid percentage. I did want to note that the separation costs expired last June, so that is not being presented today because it's not applicable. And the hybrid percentage was actually approved by the KPPA board back in April. So today we're going to discuss the administrative budget for fiscal year 26 and the investment budget for fiscal year 26. And Sherry, it begins on page 28. Thank you. There's 3 items that I will be seeking approval for today. It is the administrative budget of $49.9 million. We'll go through some of the detail of that. And then we would seek approval of the investment budget for $11.8 million as presented, and we'll go through some of that detail as well. And then I have a third request on here to formulate a budget work group to assist KPPA staff in some upcoming budget items, including the approval of the biennium budget prior to submitting to the Commonwealth, as well as working on potential changes to the 2027 hybrid percentage, and then in preparation for the 27 admin and investment budget. So those are the things that I'm going to go through today. If you go to the next page, I'm going to walk through these. I'm not going to read them in detail, but again, all of the administrative budget from KPPA comes from restricted funds. Those costs are then allocated to the various pension plans in these percentages allocated here. Though again, the overall percentages of 64.35 and 35.65 were approved in April, and then the individual boards of CERS and KRS approved their own allocation to their pension plans as presented. Even though these funds come from restricted funds, we do have to get these allocated through the biennium budget process, the total amount, and so that chart at the bottom of page 29 shows you the amounts that we've requested over the past several years and what the budget bill approved. So for fiscal year 26, the budget bill approved $49.969 million. So that's the amount we have to work with. And what we're going to present today is the allocation of that $49 million across various line items within the administrative budget. And so that starts on page 31, I believe. It's highlighted in yellow. It has last year's budget amount, the proposed budget amount, the difference between the two budget amounts, and the percentage change. In addition, there are little notes, 1, 2, 3, 4, etc., along the right side where I provide some commentary and analysis down below, explaining the difference in the change in those budget items. The biggest one that I'd like to talk about first is the salaries one. So that's going up $1.3 million. And so if we page down to page 33, there's several reasons that salary number's a little bit higher. The first item is that we've taken into consideration the 3% statewide salary increase that will go into effect on 7/1. In addition, the Personnel Cabinet has been reviewing statewide IT positions, and some of those took effect in the fourth quarter. Some of them are taking effect this month, but overall, that affected 40 positions at KPPA between round 1 and round 2. Some of those increases are temporary and can be removed. However, we are budgeting the full amount for the entire fiscal year. Conservatively, the Personnel Cabinet will continue to review not only IT positions, but all positions on a 5-year rotating basis. We don't have a lot of say in their conclusions. They've consulted us on a few positions, but overall, those increases to those positions and salaries are somewhat being dictated by the Personnel Cabinet. So we've accounted for them. We've been told by the Office of State Budget Director that we will get some additional funds to account for those increases. In the fourth quarter, we did get $110,000 related to round 1, but we do not know how much we will get related to round 2, and that will be communicated to us sometime in July, is my understanding. The other item that increased the budget for salaries this year is, if you recall, the KPPA board approved 14 additional positions as part of the biennium budget that got approved last time. However, the legislature did not grant those 14 positions to us in the budget process. So we went an alternative way and sought approval of those 14 positions through the Office of State Budget Director. And during 2025, those positions were granted to us. We did have a budget for 9 of the 14 positions in 25, but the remaining 5, totaling 14, did not. We weren't anticipate bringing them on until fiscal year 26. So the 26 budget now has a budget for all 14 of those approved positions. So now our cap overall is 307 approved positions with 284 full-time. So we've looked at all of those salaries. We've looked at the turnover ratio over the last 5 years. We've accounted for the raise that's coming, and that's what's given us the number for the salaries of $22.4 million this year. Then there's other explanations as we go down. The FICA is really in line with the increase in salaries. Employer paid retirement is lower because of the percentage that's been given to us by the Office of State Budget Director. As the funding goes up, the employer contributions go down, so that's a little bit lower in the total line items for salaries and payroll. The health insurance was a little bit underestimated for fiscal year 25, and that line item is going to be over budget for the year. So I accounted for some additional costs in 26 to account for the under budgeting in 25. Legal contracts have gone down. The auditing budget has also gone down, reflecting more accurate actual costs. The miscellaneous contract line item, I've outlined the items that are in there. We currently have an IT modernization assessment RFP out for bid. That's the anticipated cost of that. That's where that's going to be accounted for. There are some benchmarking studies in there. We are doing some additional work with underground storage that That's an estimated cost for doing that over the next fiscal year, and some other strategic plan initiatives that are not specific to the IT group have been budgeted in that line item. The other large item for the admin budget is computer equipment and software. That's actually been reduced a little bit this year compared to last year, and some of those reasons is just basically reflecting more actual costs that IT is incurring. And some of the larger projects have already been initiated and implemented, although there are still some to come. And so that's broken out in those line items as well. Let me get down to the unallocated reserve. Currently, mostly because of those additional salaries in the IT positions, as well as other budget line items, we don't have much of a reserve left that hasn't been allocated. So this year it's $22,700. That second paragraph explains what the amount was in the past years, and we have never had to utilize the reserve amount. And then for this fiscal year, again, it's pretty low. We also think we're going to get some additional funding from the Office of State Budget because of the salary increases, so that reserve may go up once we get that additional funding. As in the past, if we overspend in a category, we will come to the KPPA board and ask approval to reallocate money either from that reserve or unallocated line item, or potentially between categories. However, if a line item within a category is over budget, we will just note that in our quarterly update and not seek approval to move money between line items. That's what I have on the admin budget. Before I touch base on the investment budget, do I have any questions?
Well, thank you. Very clear presentation. Yeah.
Hey, Mike, can I add one little piece? I think everybody on this call knows, but just so the public knows, when you say that they're going to allocate more money to us for these IT positions, that's not general fund appropriations. They'll just allow us to spend more money than was originally approved, but it is still trust money. It is not general fund.
That's correct. Thank you for clarifying that. Yes. Okay, the investment budget has also been provided here by Mr. Willer, and he's provided a little bit of explanation there. In general, most of the increases for consulting and contractual services are inflationary. The legal and auditing services for investments has gone down $1.1 million compared to the budget last year, and that again is the resolution of various legal cases. And this has been discussed with legal, and again, best estimates on current and ongoing cases related to investments. So that's the investment budget and the explanations that were provided by Mr. Willer. And I'd be happy to field any questions and seek an answer from him if you have some.
Mike, where is the personnel cost for administration? Is it here or is it?
So the personnel cost for all of us at KPPA is accounted for in the admin budget, including investment staff.
Okay, thank you.
And Mike, do you need a move to approval on this, or is this information?
Nope. These are budgets that need to be approved by the KPPA board. And then again, the third item is I would like the formation of a work group. If you want to do that as a separate motion, I'd be happy to entertain that as well.
Move approval of the administrative and investment budgets at
Second.
I'll second that.
All right. Any discussion? Seeing none, all those in favor?
Aye.
Any
Good
opposed?
job.
And the motion carries. Now, the budget working group, Michael, is that something you're wanting people actually named to that today, or you're just wanting approval to create it?
I don't think you have to name members today. You might want to have a discussion with some trustees to see who has the time and ability to participate in that.
Right.
So creating it would probably be the minimum ask that I have.
Okay.
And
then
Mike, it may
we-
be helpful. I'm sorry. It may be helpful
Sure.
just on the previous one, just to know what the commitment level is. If you have a minute on that.
Yeah, we met several times, but we addressed a lot of items. I anticipate that this work group will probably meet monthly up until October to discuss the administrative budget. And then as we start working through the hybrid percentage, I'm sorry, for the biennium budget, monthly until the biennium budget is presented to the KPPA board in September, so that we can discuss the items that are in there and any concerns that the trustees may have, etc. And then I would think it would be every other month, maybe through the rest of the fiscal year, to address hybrid investment and administrative budget items. Those are public meetings now. We have a legal memo that kind of says that they should be. So all of those in the past year that we had that, when we had the committee or the work group 2 years ago, we had public meetings related to those discussions.
Well, that also allows the trustees to be paid for their time. So that makes sense. Who was on the previous committee? Do you recall?
Mr. O'Mara was a trustee from the C side, and I believe Mr. Lane was the trustee from the K side, and then the CEOs also participate in that work group.
Okay, I got you. All right. So I will seek a motion to create that budget working group. And if anyone wants to volunteer for that in the discussion, that would be perfectly fine with me.
So moved.
Second.
All right. Any discussion? Bill, it looked like you were about to say something.
Well, I've participated in this in several years, so I can, if the board so chooses, I can continue to do that for next year.
So Pruitt, you were on it the last time. You have any interest in participating?
Yes, I'll as long as Mr. O'Mara is on it.
All right. So it sounds like we have 2 volunteers to do this. We have a first and a second. Any further discussion? Seeing none, all those in favor?
Aye.
Aye. Any opposed? That motion carries. Thank you to Bill and Pruitt, and Michael, thanks for the presentation. Or Mike,
Thank you
sorry.
all. I appreciate it. Thank you.
All right. We're up to number 9, which is the investment department update, and I think Joe Gilbert's going to handle that.
Yes, thank you. Before I start that, I just want to introduce E.M. Lakelock, who joined us this Monday as I guess we'll call him a general analyst who's going to work across all asset classes and make our lives so much better and really light a fire under our portfolio. He's been here, like I said, this is day 4. So between HR and getting set up at BNY Mellon and reading policies and now a KPPA board meeting, I can't imagine a stronger week 1 for somebody to come in. So we're glad to have him. There, I guess page 38 is where the document is, where it starts, Steve's memo. I'm just going to hit a couple of highlights rather than read the whole thing to you. So CRS Investment Committee unanimously approved staff's recommendation to invest up to $30 million additionally into the Arctos American Football Fund. It's to be shared across all CRS portfolios. This is part of their real return allocation. The investment will result in an additional 5 basis points of fee concession across all CRS assets that are invested in that Arctos platform. The KRS Investment Committee unanimously approved investment staff's recommendation to invest up to another $100 million in the Kane Private Energy Income Fund 3. This is to be shared across all KNS portfolios as part of their real return allocation. The funding for this is coming from existing cash and or the unwinding of some of the proxy real return positions in that portfolio, just depending on the needs of any of the specific plans. As far as performance goes, Q3, end of March 31, obviously very stale at this point. It's been very volatile a few months, but just a quick thing on that, consistent with the overall market backdrop, portfolios produced modest positive performance during the quarter as risk markets sold off in March, giving up most of their gains that they had earlier in the year that was built on post-election optimism. This gave way to concerns as to, with the tariff talk, what that might do with potential inflation or growth, a slowdown there, what that might have. And so you saw markets that were at record highs essentially in February in a matter of just a few weeks tumble into correction territory by the end of March. If you go to page 40, this gives the performance as of March 31. I'm not going to spend a lot of time going into the detail of each plan, but you'll see the pension composite was up 70 basis points versus a benchmark of about 53. The insurance composite was in line with its benchmark at just under 40 basis points. The individual plans are there. And like I said, that's all pretty stale at this point. So I would note as of the end of March, all portfolios continue to produce risk-adjusted top decile and top quartile performance over the 1, 3, and 5, 10-year or 5-year periods. This is demonstrating the efficiency of their portfolio construction and their management. From an attribution perspective, the quarter largest contributor to outperformance was relative strong performance of the specialty credit and the real return portfolios. Those outperformed their benchmarks by 99 basis points and 128 basis points, respectively. The relative outperformance of the public equity and real estate portfolios also were positive contributors. There were a couple things kind of that were weighing on the portfolio's relative performance, that being the overweight to public equities as they struggled a little bit during the quarter, the underweight to private equity and its underperformance versus its benchmark were also modest detractors, and it's more of a benchmarking issue than anything there. From an allocation perspective, as of the end of 3Q, all asset classes were within their portfolio IPS specified ranges, with the majority of the asset classes being within 1% of the respective target allocation. And Mr. Lamb already spoke on the budget, but I was just going to note that as of the end of the quarter, the investment budget had spent about $8.9 million. This was at 71% of their budget for the year, so that was right in line with what you would expect in a 9-month period there. From an updated performance perspective, most of you've probably seen the April finalized. It's on the website, but the pension composite returned 68 basis points for the month, while the insurance composite returned 73. Individual portfolio performance for the month ranged anywhere from 62 to 76 basis points. And then May, still very preliminary. Hopefully we'll have that finalized in the next week or so, but portfolios have performed really well during the month. They look like they're going to be up anywhere from 2 to 2.7% or so, depending on which portfolio or plan you're talking about. This is driven by strong public equity markets. The U.S. markets were up over 6% during the month of May, non-U.S. markets up nearly 5%. This brings our fiscal year to date, and this again is preliminary, but we're estimating somewhere around 8 to upper 8s, 8.6, 8.7 for the first 11 months of the fiscal year. This is going to be driven by strong performance in the public equity markets and the real return investments who've both asset classes provided double-digit returns for us. And that's really the update I had for you all. Happy to take questions or discuss. So.
Questions or comments for Joe?
Good job.
All right.
Thank you.
If not, Joe, thank you very much.
Thank you.
And we will move along to number 10, which is the KPPA update with Ryan Barrow.
Thank you very much. No intention to repeat anything from prior meetings, so just focus on the update. Sherry, if you would go to item number 3. Excited that'll be the next agenda item as promised from previous meetings. Number 4 on the Trustee Impact Forum. Very excited about that. Sherry worked a magic and found a date that seems to work for the groups. We had our first meeting yesterday on programming. So she's going to send out an email just on logistics. If that could be a higher priority, that'd be great. And then any specific items that we were asked, she's going to follow up with that. And if you have details on programming, we'll get a draft schedule, work with the CEOs on that. And then kind of off script The Louisville office mentioned to a few of you, it was scheduled. Finance let us know it was scheduled for capital projects and bond oversight the 24th. The delay on this one was the vendor did not get back the contract. There's requirements to submit. We are pushing hard to go next month to get finance facilities specifically to approve that. And then I guess Joe stole some of my thunder about Ian. Very happy to have him join us. The only thing he left out is Ian picked Stack's Barbecue on his first day. So very glad to have him. Happy to take any questions, or we can move into the strategic planning.
Okay, sounds like we're good. So we will thank you very much, and we'll move along to Rebecca to talk about the strategic plan.
Good morning. This is a fun topic. I enjoy talking about the strategic plan. So let's back up a little bit and talk about how we got here. KPPA as an entity has not done strategic planning for a lot of years, and it was a priority for ours. We always have a million fabulous ideas. We have a great staff who is always looking at how do we improve. And so we have a ton of ideas, but of course, limited resources. Like a budget, you have to decide where you're going to spend your money, and your human capital is really important for a strategic plan. So very early in 2024, we partnered with a vendor, ProValiant, to come in and kind of coach us through what is this going to look like moving forward with KPPA. They did a lot of brainstorming sessions. They talked to folks. Where do you see big improvements? What can we do? What would you like to do? They categorized and grouped, and then helped us come up with kind of large categories. We presented that to the board in June of 24. And you guys identified what is in the center of this object that you're looking at. The center white circle is the strategic plan summary. It's multi-pages. You guys approved it, but what you identified was 4 areas of focus. So we said we're going to look at organizational excellence. And then within that, there were several kind of drilling down a little closer to detail would be initiatives. What do those initiatives look like? Then we looked at customer service delivery and improvements to that. Infrastructure and key resources was the third area. Key resources being mostly the human capital to that. And then governance. How do we as a staff, not you as a board, but we as a staff, support the board, look at governance pieces? And again, each of these 4 areas of focus have initiatives. The full plan that I'm going to present to you today is in your board books. It's on page, well, I don't know what pages we're on now, but 51 of this page and 82 if you're looking in board books. But if you're looking at Sherry's PowerPoint, it's 51. But we're not going to look at that. I figure you guys can read that and ask me questions. I figure most of you already have read that. We're just going to talk about it in a big picture. So the plan, the summary plan really covers these 4 fiscal years that you're looking at, 25, 26, 27, and 28. We certainly did some work early in the latter half of, in early calendar year 24, in the latter half of fiscal 24. And we have a page that gives you all of those summaries. But we spent most of fiscal 25 working with ProValiant, getting started, but we didn't present to you an implementation plan. And staff was asking for it. You guys were asking for it. So what we're presenting to you today is an implementation plan for fiscal 26. The idea is, here were the big objects. What more specifically are we planning on doing it? So that is what we're going to look at today. We'll do the same thing later in 26. We'll do it for 27, and late in 27, we'll do it for 28. It's kind of a fluid plan. There's not room to add without removing things, but we certainly can do that. Again, back to we have a million ideas, but the bandwidth for 50 or 100 of them or whatever that is. So this is really prioritization. If you as trustees have things that are important to you, please talk to Ryan and John and Ed, and they'll talk with Ryan about what you want to add to the pile, what you have concerns about, what you think is great. We would love all your feedback in these areas. Can you do the next page there, Sherry? So looking at, again, at the 4 areas of focus, we're going to look at 4 PowerPoint pages. At the top is the area of focus, so organizational excellence. And then the lighter color pieces are the kind of larger initiatives. So the pink-ish on this page are larger initiatives supporting the mandates, and benchmarking and best practices were those pieces. But in fiscal 26, we won't necessarily complete it all. It's not that we haven't already worked on a particular object. It's just what are we going to spend our resources, both human and financial, in fiscal 26. So we're going to, we've got folks looking to assess the 6 mandates. They've been in place for a long time. Do we need to update them? What would that look like? Ryan has asked the Leadership Academy to do that. We really like the thought that our future leaders will plan and think through what is excellence at KPPA and what are we missing and what we'd like to get to. So that Leadership Academy is looking at that. The other big piece under this is Strategic Planning Committee. So functionally through fiscal 25, it's been pretty much the executive leadership has made the plans and made the prioritizations and presented it to the board. Ultimately, that will shift to a strategic planning committee who will have a little more bandwidth to watch it and monitor for that. So that is on the docket for fiscal 26. Under benchmarking, we're setting up ongoing KPPA director trainings. We've already had a couple of those. Those are going well. We like those. Our directors have responded well to those. We're looking at management policies. We have IT policies that have been regularly updated and reviewed with real precision, and some other policies that lack that precision. And so we're going to look at how we do that. And then we're going to look at more business process improvement areas. Moving to the next page, Sherry, this is the second area of focus is customer service delivery. There are 3 larger initiatives under this approved by the summary, but for fiscal 26, under service delivery programs, we're going to look, we're going to continue. We started this in fiscal 25 with Provaliant's help. We're going to continue it in 26, creating 3-member teams. These 3-member teams come from the business units. They are committed about 50% of their time to this. So their day-to-day work is taken up by everybody else. This is really a group effort across the agency. As the agency, we've presented this to directors. We'll present it to all of our employees during the all employee meetings. But as an agency, these are our priorities. And so when we go to directors and say, hey, we need somebody 50% of their time, our directors understand, great, we'll do it. We'll rearrange work. We'll make sure all the wheels on the bus still happen. All the day-to-day work still happens, but that we can assign some resources to these pieces because these are the things we've committed to be a part of. So we're going to continue with those 3 teams, 3-person teams. To stagger them a little bit, we give them some project management leadership. The teams in 25 were QA looking at a particular issue that was a bottleneck, and we've had really nice success with working through that. We looked at surveys, which are really under the satisfaction surveys piece, but that will continue. And we've looked at member presentations, which is under the second initiative, targeting communications. A team looked at that. And then we also had an artificial intelligence team. So we really want to look at what's next. Where can we dip our toes? So we picked an interesting team of business and security and tech, and they have really dug in, and we assigned them very specific, kind of a narrow focus. We said, look at after call action in the call center. We spend 11,000 hours on that. How can we use AI? Could we use AI to improve that? They are in the process of looking at that. They're also looking at board minutes, and we spend an awful lot of time creating board minutes, and could we do something with that? So it's those types of things that will continue in 26. I suspect that this 3-member team approach will continue at all the fiscal years. It's really worked for us. Our teams like that 3-person. It's different than what we had done in the past. In the past, we had a lot of people, which really slowed the progress of moving forward. If you have to find a hole in calendars for 12 people, you're not going as fast. So that's the new approach. Okay, let's move to the other one unless you all have some questions on that. The third area of focus was both infrastructure and key resources. This really could have been 2 areas of focus, but we kept it to 4. So we're keeping up the Leadership Academy under that succession planning, meaning are we appropriately pouring into what is potential leaders for the future? Key performance indicators, we're expanding that. We've done a pretty good job getting basis for a lot of those. And then technology has a lot of pieces because it touches a lot of areas. Couple of things I want to draw your attention to. One is that last thing on there that says eliminating the use of microfiche. It occurs to me recently that I really worded that poorly. We're not eliminating, we don't use microfiche very much. We're moving microfiche to an electronic format. So that's a project that we've actually been working on about 1.5 years. It's still on here because we're going to continue in fiscal 26 to do it. I'm hoping it'll finish in 26, but if it doesn't, it will be on the 27 plan as well. So that's kind of giving you an idea of what you're looking at with the implementation plan is where are we spending resources for in 26. The top one we've talked to you guys about multiple times, this modernization project. So we've submitted a capital project plan. There's more information on budgeting with all of this in the bigger plan. You can look at that in board books on page 98, but if you want to look at that some more. So in 26, we are in the process. I suspect it'll be finished in the next week or 2 to hire. We submitted an RFP and we're hiring a firm to come in and look at, they call it current state, and then make some recommendations for future state. And then we will have a much better idea about how expensive all of these pieces will be. And we'll be back to the board, of course, along the way with that. But that is a significant piece of 26. And it will likely drive a lot of what are we going to do moving forward with the strategic plan. If we have to spend a whole lot of resources here, then we can't spend them here. Again, the planning is about where are we going to spend our resources. On that list is also the accounting team is replacing Gravity. They're moving to something called Workiva. That's a ton of resources for the year. We're looking at an AI policy because right now we just have a short little AI paragraph within an existing policy. We're looking to expand that. Some other projects. Governance, please. The next page, please, Sherry. This is our last of the 4 areas of focus. Again, it has 3 bigger initiatives. The first initiative, we call it KPPA board, but this is not about what you all do and how you do it. This is about how we support you and are we supporting you well? So this one's looking at documentation. We've done some of that in fiscal 25. We'll continue it in 26. Are we appropriately archiving and policy reviews and those kind of things for the boards? Are we supporting you appropriately? Operational decisions, this one's interesting. It could have fallen in any of these 4 areas. This is the employer invoicing. We put it in governance, one, because it was a priority for the board, but also because we were looking at potentially some policy changes, internal or board policies, I'm not quite sure, but we were looking at that. And so that's in here. Obviously, we've spent a ton of time in 25. We will continue in 26 with employer invoicing process until it's complete. And then that last area is operational resources. We're looking at how we implement bylaws. Are we ticking all the boxes? And the compliance officer move and expanding that compliance officer to include more than just investments is part of that. That certainly started in 25 and it will continue in 26. There's certainly more in the full plan. There's a lot of pieces to that. And I want to take, before I take your questions, I just want to take a minute to shout out to our staff. They have embraced this. They're still confused. We're still making changes, and I think that will continue for a couple of years until this gets into our DNA as an agency. But they've really been supportive about, okay, these are the things we're going to move forward on. This is what we're spending time on. They've rearranged resources. Our staff is just great, and I'm just taking that shout out. Do you guys have any questions about any of this?
Lynn?
Just a few comments. When I look at this, I remember it's been this, we kind of waited till Ryan got on board to sort of turn it over to you all for implementation. And I think you've done a tremendous job. Some things have already been done and you've put in place, as I see it, a way to continue this. You use good words in here, like best practices on certain things and I know in the AI area that will especially be important. I do have to say I laughed a lot when I saw the word microfiche because my husband's company 50 years ago was turning microfiche into readable, electronically readable documents, which is housed, at that point was actually housed by Bellarmine. So Pat, maybe one of these days I'll tell you that story. But so that did bring a laugh. So I'm glad to see it's not using it's just converting it.
Mhm.
So congratulations.
Thank you. We appreciate that.
Any other questions or comments for Rebecca? And if not, I'll seek a motion to approve the updates to the KPPA strategic plan as presented.
So moved. Second.
Okay, any discussion? Seeing none, all those in favor? Aye. Any opposed? And that motion carries. Usually we have a new business or an old business or some other type of business at the end of our agenda, but we don't this time. And hold on just a second. Lynn.
Okay, I do want to make a statement. I know this is gonna, well, I don't think it's gonna be a surprise to anybody, but recently, very recently, the KRS board became aware that CERS intends to issue a request for information related to potential external consulting service related to investments. We do not understand the rush of this without having, which is excluding KRS from this process. I will say my own experience, in my career, I have been the CFO for 3 governments before becoming the CEO of my last company. And I was on the board of the government finance officers. I am very familiar with contracts like this that have been abused, let me say that word, where you rush into them with a 30 days and the payment is a 50-50 split of whatever the person saves. And usually it's in the procurement area. But there are others, and you can Google it. I did contact Lyle yesterday, with the chairman of CERS, and asked that it be delayed, that CERS put this on hold so that KRS can be fully briefed and understand, and that this becomes a collaborative effort by both boards and the investment staff. So I'm putting that on record. I'm very uncomfortable because I know of these kinds of contracts and without really knowing what's in them. I mean, I do trust Wilshire, but I don't know this other company. And so it is our desire, but basically I'm just putting it on record right now. So I'll answer any questions.
Hey, Lynn, thank you. Anyone have further comments or want to respond to that?
So for the kind of after action report, I would sign that to myself and Steve, and we'll make sure that gets done.
Thanks.
Anything else? If not, we've made it through a fairly lengthy agenda in 1 hour and 15 minutes, so we've kept it concise and on topic. And as always, I appreciate everyone's attendance, and we are adjourned.
Thank you.